So we're gonna discuss the tired landlord strategy. If you have no money in the deal and you get a return, what is your rate of return? Infinite. I've been buying this stuff for 10 years. I love this stuff. Landlords are tired because they worry about make-readies, they stress about it, they don't understand its cost of doing business, they worry about maintenance, and then they don't have the crews to do the vacancies. They can't do it fast enough, and they're afraid to raise the rent. So those are some really bad mistakes. But what is the absolute worst mistake that they're making? No, we'll get either quitting, but they are undervaluing the rent. And this is everywhere. The rent's below market. That's their critical error. You could buy it with cash, refinance it out with a bank, and get all your money back. If you're all in at 80%, what can you do? You can have no cash into the deal. Why is no cash into the deal good?
Because a zero in the denominator is infinite.
If you want cash out, you have to wait the 5 or 6 months. But if you just want to refinance no cash, then you can refinance.
The reason we wait 6 months is because we want to pull more out than what we've got in the deal. You can day one start that refinance. You can get all of your 81 out of it.
Yes.
The reason we wait 6 months is so that you could get the appraised value, but we're limited in how much cash we can get in those first 6 months.
I'm sure at the back of your mind is like, why would they make such an irrational decision? Why would they make such a bad call? Well, it's not always a bad call for them. A lot of them, they've already made their money. They bought it, I bet you this guy bought it for 20 in 2013. So he's made his money. They don't know how to manage it, so they get frustrated and they quit. Their depreciation schedule's up. If you've owned something for 27 and a half years, you lose your depreciation, so that's another reason to start selling or transfer at the asset. So we've been doing tired landlord strategies for this year, and they've been working out pretty successfully. If you want to go do this, here's how I would do it. Make this thing, check it, be like Santa Claus, check this list twice a week. Make your offers. You gotta understand, your amount of deals are a function of your offers. So if you're like, I made 2 offers, I didn't get a deal, like, it's like, so? If you're not getting the deals like with my team, if we're not getting the amount of deals I want, what do? More offers. Deals are a function of offers. And like, look, this spreadsheet is tedious. It's boring. It's not sexy. But I think with Mark, what he just said is what works is long obedience in the same direction. Like, it's not exciting deal by deal. It's not exciting make ready by make ready. But knowing where your end game is and keep moving forward, if I'm good at anything, I'm good at long obedience in the same direction. We get a list whenever there's an eviction. If your house goes up in eviction in St. Louis, we instantly get notified and we're texting you the next day.
Oh, really? Oh, nice. What are you saying? Just out of curiosity, what are you telling them?
Just if we buy occupied units, because most tired landlords don't think wholesalers buy occupied units either.
And they say, we'll pay you 110 times your rent. Like, that's going market. We're giving you a great offer at 110 times your current rent. And they don't understand.
And it's all cash. And the pain goes away in 10 days with no finance.
Because you're not lowballing them for what it is. And we have the knowledge to make it more than it currently is. So it's not like they think it's worth this and we're having to talk them into this. They think it's worth exactly what we're offering, because to them in their world right now it is.
Because to an investor, an active investor, it's worth that. Yeah. Connor's over here. He walks most of our tired landlord deals, and I'm just like, hey, is the make ready below 10,000 or above 10,000? If it's below, we move forward with the deal. So here's your new tired landlord offer price. Actual rent times 110 minus $10,000 for the make ready. Before I send Connor out, I'm gonna at least take a look at the pictures. I mean, that tenant's taking immaculate care of the house. Like, there's not crap everywhere. They're not laying anything down. It's just nice and clean. Like, it's a great tenant. And then we send in our eval team and Connor's like, hey, good tenant. Make ready's less than 10, green light. So with an appraised value, now notice this house could be worth as much as 130. But when I looked on the MLS, I'm like, you know what? I'm gonna step it down. It's worth 120. But the right appraiser with a nice wife, it's worth 130. So with an appraised value of 120, what will the bank lend on it? 90. Offer price 80% or less than the appraised value. The bank will most likely lend 90. You offer 71. You spend 10K on the renovation. You refi out at 90. You're all in for 81. And I would say go up to 90, 95 to 100 on this if you had to.
Where do you get these leads, or how do you go find these tired landlords? Where you getting them?
Texting, cold calling.
All the lead generation stuff you talked about in part 1.
I don't believe you can be financially free with your own after-tax income. I think it's mathematically impossible. So if you want to speed up your game plan, you got to get access to capital, and you got to find deals that you can get at 80%. That's why tired landlord deals are really interesting for this group. And the other reason you got to have other people's money. So in California, everything you do is generally cash offer, right? But pretty much, right? And does that mean that person has has the cash in their bank account, or it just means they have access to hard money or private money?
Yeah.
So get in your mind, when you make a cash offer, it doesn't mean it's your offer.
Your cash.
Your cash. Does that make sense? I think people get a little hung up on that. So there's two lines for any real estate seller: cash buyers and finance buyers. Who gets to the front of the line faster? Cash. So that's why this is an arrow you gotta have in your quiver. So if you wanna go fast, you gotta learn to raise the private money.
Okay.
Why can't I go to a bank and say, hey, give me $1 million so I can go invest in a 401k? Okay, Bill, there's collateral. It's just not collateral they want. Why won't they accept stock as collateral? Because it's crap.
Worthless.
What about mutual funds and money market funds? This is how you're supposed to get wealthy? Like, come on. Like, you gotta, if they are so safe and so protected, why won't a bank give you collateral on it? But what will a bank lend on? Hard assets. Why? Because as Mark Delatorre just showed, it actually works. It actually creates collateral. It's something real and tangible. So you gotta recognize that you, at this point, what you know, you can be someone's private lending hero. Like, when you find a great real estate investment for private lending, you're performing an invaluable service. At the very bottom line, if you deliver on your private money loans, you're defending these people's money from inflation. If you're interested in investing in real estate in a completely passive manner and want someone to find the house, to fix the house, to find a tenant, or help you sell it, click the link below to book a call.